Renting is just throwing money away. You should always buy a home. You've probably heard this, but here's the reality in 2025. Some buyers are spending hundreds more each month than renters and still losing money. Why? Because the UK housing market has changed and buying isn't automatically smarter anymore. So in this video, I'm going to break down 3 key facts you need to know in 2025, what the numbers actually say, and how to figure out if buying or renting is the better move for you right now. So let's start by breaking the noise and actually looking at what's actually happening in 2025. In 2025, the average UK house price is around £269,000. So it's up about 4.9%. So let's say 5% from last year. That's decent, right? But nowhere near the insane growth we saw during the pandemic. So if you're buying a house right now and you're looking for a quick flip, then it's most likely that you're overestimating your return. And if you just adjust for recent inflation, then that means that house prices in many areas have actually dropped, a silent crash in real terms. And then the next point is that rents are rising fast, but so are mortgage costs. The ONS, which is official national statistics, it says that the average private rent hit £1,326 per month, which is up 8.1% year on year. And in London, it's 9.9%, which is basically 10%, right? But that's not the only thing, because mortgages, they're also up thanks to the 5 to 6% interest rates. So if you've only got a 5% deposit, your mortgage cost could be £300 more than the rent on the same place, which, to think about it, is pretty crazy. So that old line of buying is cheaper than renting, it's not always true anymore. It's not as clear cut, guys. And the biggest factor for that is interest rates. If you look in 2021, the interest rates were around 2%, right? 2 to 3%. But now in 2025, it's somewhere along the lines of 5% to 6%. And that changes everything, because that means your affordability, your monthly payments, and your stress levels, they're gonna go up. And the average age of a first-time buyer is now 33 years old, which is the oldest it's ever been. Becoming harder and harder to own a property. And I always go back to this quote by Dave Ramsey, right? If you're starting out, you're young, right now, you must take total control over your money, or the lack of it will forever control you. That really hit me, because it's so true that right now you have to make these important decisions where you're stacking the odds of you being able to purchase a house, because purchasing a house is not like a given. Before, in my parents' generation, buying a house was the norm. It was like the inevitable. It's no longer the case anymore.
We'll get back to the video in a few seconds, but 70% of you watching this video aren't subscribed to my channel. Please do me a favor and hit the subscribe button and buy more properties in the next few months. I'll be sharing everything so you can learn from my mistakes for free. Anyways, back to the video.
So let's now look at the raw numbers. What do the numbers actually look like, whether you're buying or renting head to head? And when I was researching for this video, I was surprised, because when you look at the numbers, and numbers don't lie, guys, it paints a bit of a different story. So renting, the average rent in the UK right now is £1,326 a month. And if you're buying with a, let's say, 20% deposit, the average monthly mortgage is £1,038 per month. So it's cheaper if you've got that big 20% deposit, right? But a lot of people right now, especially with the Help to Buy scheme, you're putting down a 5% deposit, right? If you're paying a 5% deposit, you're gonna be on average paying £300 more than a renter on the same property. So think about it. If you're putting down a 5% deposit, you're a house owner, it's still costing you more than if you was renting it instead for the same property, which is crazy. So if you want to figure out for yourself, go on Money Saving Experts Rent versus Buy tool, plug in your rent, your deposit, and your rate, right? You'll be surprised at what the break even really looks like. So please make sure you do that. And then I guess another thing is that when you're buying a property, it's not just a deposit that you're putting down, right? There's other upfront or hidden costs. It's not just your deposit. So what is it? You've got stamp duty, you've got solicitors, surveys, you've got moving in costs, right? So on a 300k house, you might need 15 to even £50,000 more upfront, especially if you start like buying furniture and stuff like that. Renting, maybe 2k tops. And then just remember as well, guys, that after you buy a property, you're the one fixing the boiler, you're the one replacing the roof, paying building insurance, right? So all of these little costs, they're going to add up. So you need to keep that into your calculations as well. Don't just think, oh, 5% deposit, 10% deposit, I'm done. Because you're not. And now if you just flip it, if you're a renter, and I know this myself because I've built a portfolio of 20 properties now. When there's a problem in the property, what does the renter do? One call to the landlord or my management company, and it's their problem, right? It's the landlord's problem. The landlord has to pay, they have to fix, they have to keep the property in good condition. So always keep that in mind as well. And I still think buying property, whether it's your home or an investment property, whatever it is, I still think it should be everyone's end goal. As an investor, you always have to think to yourself, where can I be allocating my money where I can get higher returns in a safe and predictable way? That's how I think, right? And how I see it is that if I'm putting a £40,000 deposit into a house, that money is locked in, right? And the house that you live in, it's not really going to make you any money in the short term on the cash flow. Yes, the property price might go up, but you have to think, are you losing out on other opportunities? Because I'll give you my example. I have a portfolio of 20 properties at the time of recording this video. And on an average, my portfolio is returning a 17% ROI, return on investment, based on cash flow. So appreciation's a bonus, right? 17%. So for me, I don't really look at any other investments now, unless I'm like, okay, I know I can get more than 17%. And that's, I guess, what I'm trying to say when you're buying your own house. When you're buying your own house, it's very unlikely that you're going to be making any returns, right, in the short term. And then let me give you context. The stock market, it averages 8 to 10% a year in the longer run. I've already talked about my own property portfolio generating around 17%. So you really have to think that while you're sinking 40K into a home that may grow 2 to 4% a year, you could have used that capital to start a small portfolio, invest in a BRRD, or even diversify into higher yielding assets. That's the real opportunity cost, because buying a home isn't just a decision that you have to live somewhere. It's actually, what I would say, it's a financial trade-off. You're saying no to other plays with higher ROI, at least for now, for the sake of you having a home. And yes, I understand that money isn't everything, VJ. It's not all about the numbers. Completely understand. Lifestyle matters as well. So let's talk about that next. So let's get real now. Forget your spreadsheets for a second. You have to think what's going to make you happy. Because if you think about it, if you own a house, you are the master of your own destiny. That means there's no rent hikes. There's no landlord kicking you out. There's, as silly as it sounds, there's a freedom to paint, right? If you're settled and you're ready to put down a deposit, right, it gives you complete control. But as one buyer said recently, I thought I'd made it, but now I might lose the house. It's just too much. And I guess the whole point of that is that home ownership, it only really feels secure if you can afford it. If it starts becoming a financial burden to you, then you got to question that, was buying a home, is it really as good as people make out? And then I understand what renters will tell you. Renters will say, but yeah, I can move cities on short notice. I can try out new neighborhoods without my money getting stuck, right? My money being stuck or committed to one property, right? I have flexibility. I can live in places that I couldn't afford to buy in. And this is very similar to when you're buying a car lease, right? If you're buying a car lease, it's easier for you to get a nicer, flashier car on a lease because you're paying monthly. Or if you had to shell out 30, 40,000 pounds on a car, it's very difficult, isn't it? And a home is no different. You can rent better, nicer looking houses in better areas because the commitment is only on a monthly basis, not a lump sum, which a lot of people struggle to save up for. So how I see it is that if you're building a business, maybe you're single, you've got no commitments, you like traveling, or you're just not sure where life's headed, renting, it keeps you agile, doesn't it? It gives you a lot more flexibility, there's less burden. And I came across this rule on the internet that said that buying makes sense if you plan to stay in the house for at least 5 years. If you're thinking long term, basically, that you want that asset in retirement, right? But if you're still building, right, if you're still young, if you're years away from settling down, then buying a house, it could actually hold you back, could actually backfire, because then you've put all your pretty much life savings into one thing and you're losing out on other opportunities, whether it's starting a new business, investing elsewhere, not even monetary. Like maybe, you could have moved into a city like London where you could have made more connections than, there's so many options. And you've probably heard of the quote, don't wait to buy real estate and wait. It's a great quote, but only if you're ready and only if you can afford it. Otherwise, it's gonna bite you in the bum. And I tried to make this video as unbiased as possible, right? I have my own home. I live in my own home, but I also have a fairly decent portfolio. So I've covered both bases. A lot of people right now they do not have that luxury. They do not have the options to be able to do both. So I can't answer the question for you. It all depends on, can you comfortably afford it with a buffer, even if the rates go up? Are you planning to stay in one place for 5 years plus? And do you value security and comfort over flexibility, or because someone told me I should? The truth is, renting isn't a bad thing, and buying too early isn't exactly winning either. The best decision is the one that fits your life. So if you're thinking of buying a house in the next 12 months or so, watch this video next, which is called How to Buy a House from Start to Finish. Go watch that video, and remember, your home should be a blessing, not a burden. I'll see you next week.